Hello, Todd Long here, Home Advantage Partners of Keller Williams. So I just got off the phone with one of my clients talking to them about a potential short sale, and sometimes I forget what people know and don't know about selling real estate. So I thought I'd do today's video on some things to think about when considering selling your home and you owe more than the home is actually worth. So there's a couple different ways to deal with needing to get rid of a home when you owe more than it is actually worth, or you owe more than the actual loan on the property. One, of course, is a short sale, which we're going to talk today a little bit about a short sale. But the other options is obviously a foreclosure. That's probably the worst option for you and the bank. For you, because it is a very hard hit on your credit, can last up to 7 years on your credit. You can also do a deed in lieu of foreclosure, which my understanding isn't much better than a foreclosure. It just means that it's a soft transfer of the deed over to the lender, and often there might be some money involved. They might give you, $1,000, $1,500 to actually move out of the property, so they don't have to go through the hard foreclosure process, but still hit your credit the same, is my understanding. They might do a workout program with you. Most of the time, how that is structured is they'll take what your actually back payments are and they'll roll it into the back side of the mortgage. So instead of you having 270 payments left, you might have 275 payments left. They're only really going to do that if they can see that you can actually get caught up and start paying the mortgage. And then the other option is a short sale. And the reason a short sale might be an option is if there truly is a hardship as to the reason that you can't keep making the payments on the property. So some examples of a hardship would be maybe there's a divorce and the two parties no longer are together and they needed both incomes to be able to pay for the mortgage. Maybe there's a loss of income. Maybe spouse got sick, spouse got laid off. There were two sources of income and now there's only one source of income, and they can no longer, the parties can no longer make the payment. So this would be a good option for a short sale. And honestly, most banks are much more open to doing a short sale than they are a foreclosure, assuming that you actually are in a short sale. Now, if you only owe $100,000 on your property and it's valued at $250,000, I can almost guarantee you the bank, if they have the opportunity, is going to go forward with a foreclosure, because they know they immediately have an equity position if they foreclose on you. That would not be a short sale option. A short sale would be you owe $260,000 on the property and it is worth $225,000. So there is no value in that property for the bank. They have no reason to want to actually foreclose on that, because they're going to have to go through the eviction process, get you out of the house, change the locks. There's probably going to be more maintenance involved with them, especially in the wintertime. They're going to have to keep the heat on, keep the lights on. They're going to have to have an appraiser go out, a broker go out, do pricing opinions. They're going to have an attorney involved. There's a lot more cost for them in doing a foreclosure. A short sale, you actually stay in the property and we sell the property for you, and then we negotiate with the bank. Well, we don't actually negotiate with the bank. We present the offers to the bank, and then the bank does a pricing opinion and they counter our offers. So the bank has a vested interest in doing a short sale for those reasons. The other reason that the bank prefers to do a short sale more than a foreclosure is because if you are not paying your mortgage, that is a non-performing loan. It's not good for their balance sheet, but it is a non-performing loan. The moment they take that property back in foreclosure, that is a non-performing asset. They now own a piece of real estate that is no longer performing. They cannot have a lot of non-performing assets in their portfolio. It's going to start to affect the amount of money that they can actually get to lend to other people. They can have bad loans, but an exorbitant amount of non-performing assets will stop them from being able to loan out monies to others. There's a lot of technical details that go into that, But trust me when I tell you, they don't want foreclosures on their books. As a matter of fact, if they're on their books for more than 180 days, the lenders actually have to hold 7 times the value of that property in cash in their accounts in order to offset that risk. And that's it's a federal banking law. A lot more detail into that, but the point is they would rather do a short sale with you than to actually do a foreclosure. So the way the short sale process works is you have us come out, we'll do an analysis of the property, we will set the property price near the fair market value, and then we will lower the price every 30 to 45 days typically, until we get to a price that we actually attract a buyer. At that point, we then take the offer from the buyer, we submit it to the bank with all of your information. So this is one thing to know about a short sale. You must be prepared to turn in your last year, 2 years tax returns, your bank statements, any employment records as far as income that you make. They're going to do a detailed analysis of your financial situation in order to prove to them that it truly is a hardship that you cannot pay this mortgage. So we'll go through a lot of detail with you, and we have a short sale negotiator that we use to negotiate with the bank for us to get us through that whole process. There's software called I just forgot the software that we use to talk to the bank, because I don't do that. That's not my lane. I actually have somebody for that on staff that will help us with the short sale negotiations. But just be prepared that you're going to have to turn in all your documentation. And a short sale does take some time. It usually, from the point we get it on the market and we get a contract, from there until we get through the short sale process, depending on the bank, the larger banks are harder to deal with. It's usually going to take 3 weeks to up to 3 months to get the approval back from the bank before we can move forward. So that's something to know also as a buyer. If you're offering on a short sale, be prepared to be in that deal for a while. And there's some things we can do on the buy side to actually protect you a little bit better. So contact us if you're thinking about buying a foreclosure or a short sale, because there's some nuances that we need to talk to you about. I think that's all I have to share today about the short sale process. There's much more that I could go into, but contact us at 704-360-0667 or send me an email at toddlong, TODDLONG, at homeadvantagepartners.com. If you are considering selling your house and you owe more than it is actually worth, please get with somebody like myself that knows how to get through the short sale process for you. It will make your life a lot easier.